Who are the buyers of those stocks?
It's people who believe the news, which I'd recommend no one ever does. And a lot of momentum traders, so like it's like a self-fulfilling prophecy that if you know that the coronavirus sector is hot because people are dying and there's nothing more important than lives, then everyone thinks that other people will buy companies if there's a valid reason, even if the company's like lying. So then when enough people think that other people are going to buy, they will buy based on the fact that other people will buy when it rises, even a few percent. And then it becomes a self-fulfilling prophecy. Welcome to the Steady Trade podcast. We are back, Jeevan Staunton and Ann Curtin Kim. Just saying things back to front. Jeevan Staunton, Stephen Johnson, Ann Curtin Kim, Kim Ann Curtin. On Steady Trade Live, discussing hot sectors. There's been no more relevant time really to do this, simply because of coronavirus, and we're in a really kind of crazy period right now with coronavirus, and the market is reacting accordingly. But what is going on for you? What have you researched? What have you learned for hot sectors?
Well, I feel like, and the rooster is back, by the way. So if you hear the rooster in the background, it's a painful day. If there's any rooster catchers in Hawaii, please contact me right away. I'm really glad that you had me dive into the hot sectors, because I feel like it helps me wrap my arms around finding, and I have a question around this, like finding the places that I'm the most curious about. Is that, so I'm going to read the sectors, just all sectors, just because I want to speak to them for the beginners and make sure that I'm correct in my research. So what I have here are 11 sectors: energy, basic materials, industrials, consumer discretionary, consumer staples, healthcare, financial, information technology, communications, utilities, and real estate.
Yeah, it's not a bad. I mean, I don't know what the source is that you've took from that. I think when you talk about like bigger sectors, or like sectors in the economy in general, it's probably true. But when you trade stocks, and especially micro cap stocks, the sector's kind of whittled down, and it kind of goes down to whichever market you're trading. So like, say you're trading, I'm thinking of the FTSE because I'm looking to invest in the FTSE 100, but that's London. If you trade in the, say if you trade in the NASDAQ market, you'll get a lot of like technology companies, which is more like internet businesses. Where if you trade on the New York Stock Exchange, you'll get more like the .com bubble companies, the website companies, the airlines, maybe, and stuff like that. But generally, the sectors that run are biotechnology companies are always running because they need to raise money to continue funding research. So they're generally good shorts. You get a lot of green energy because that is the thing of like 2020. Any kind of green energy company runs. Oil and gas is a sector that will definitely run, but it's not very volatile. Like biotechs are small companies, so they'll tend to like really be volatile. And there's definitely some others that I just can't think of. Obviously, you've got like in retail. Retail's a sector, but it's not a sector that's heavily traded by like micro cap traders, like day traders, because it's not so volatile.
So the sectors that you would be interested in would be the ones that are the most volatile, or are there certain ones that you're just experienced in, have always paid attention to?
Yeah, no, it's a good question. The sectors that we trade as day traders is what every day trader trades. It's not what you like one of the hottest sectors of recent years is shippers. shippers and weed stocks, because obviously pot got legalized a couple of years ago, so the pot market went crazy, and loads of pot companies like went from like 50 cents to like $20, $30. But like one of the famous sectors that runs the shipping sector hasn't run in a few years, but it ran when I first started trading, and it's run multiple years before that. And it's cargo. It's companies that ship stuff, like ship the freighter things.
That's Hawaii Island. Our island is completely dependent on those cargo ships because everything gets to Oahu and then it has to be taken on a boat over to the Big Island. So I see that ship, usually they're like, we know the schedule, the day it shows up because it brings all our supplies.
Yeah, it's great. It's pretty crazy, but yeah, I mean, you'll be pleased to know that the vast majority of these shippers, or at least the big ones, are complete scams. They manipulate the market, they tell lies, and they push up the stock price only to like dilute the shares and raise more money to continue funding their operations, which they're running at a loss.
If they're so part of like the experience of just a place like Hawaii, how is it that would be the case? Like, why wouldn't they just organically be profitable because they're needed and there's not that many to pick from?
I mean, the major shipping companies that are regularly occurring on the stock market are run by, I don't want to say criminals, but they're run by people who know how to bend the law to make even more money through the shipping sector and the ships that they own. They know how to basically fix the stock market so they can manipulate it to make a lot of money.
It confuses me when you could make a lot of money without having to manipulate anything. Like, why isn't that enough? But apparently it's not for some people.
No, but I mean, it's not, I guess the point of the podcast today is not whether or not what people are doing is ethical, because a lot of trading is on the fence of not trading is ethical. Like us day traders, we are just trying to take advantage in a fully in a market where everyone's against each other. It's completely transparent and fair. We're all just trying to do the best we can. But so I think this is fully ethical. But I think when you get into the shady side, and Tim Sykes talks about it constantly, when you get in the shady side of owning companies and owning shell companies, and you can pay people to manipulate the stock price, it gets really shady. And the shipping sector is really famous for being extremely shady. But the point of the podcast is not to talk about how ethical some of these markets are. It's more, how can you take advantage of it?
And what do you, when you, right now, are you, because you spoke to coronavirus, so presumably right now we would want to be paying attention to the volatility. I presume there's a lot of it in healthcare.
Yeah, so I mean, the market's really crazy right now because the SPY and the QQQ, like the SPY, which is the Standard and Poor, and the Nasdaq, the main American markets are all crashing. All of the main markets that represent the biggest companies in America are all crashing. And I think I read somewhere that the crash is the biggest crash since the financial crisis. But don't quote me on that.
Yeah,
the Dow Jones has, yeah,
since 2000. Yeah. But it may be even transcending that now because of yesterday. So it's still not going well the second week. So it could be maybe on its way to worse.
No, and I was going to short the market at the start of the year, but and I would have been wrong, but I didn't know coronavirus was going to hit. But the thing is, though, well, the market's an even sum game. It always has been. So, the overall markets are dropping, and the coronavirus stocks are shooting through the roof because they're all very small companies, and they're all biotechnology companies trying to find the vaccine, and they're all pushing out press releases every day saying, we're increasing our efforts to find a vaccine. We're shortening the deadline to find a vaccine. And like 99.9% of them are not going to find a vaccine. Like no company in the world's found a vaccine.
So who are the buyers? Who are the buyers of those stocks?
It's people who believe the news, which I'd recommend no one ever does. And a lot of momentum traders. So like, it's like a self-fulfilling prophecy that if you know that the coronavirus sector is hot because people are dying and there's nothing more important than lives, then everyone thinks that other people will buy companies if if there's a valid reason, even if the company's like lying. So then when enough people think that other people are going to buy, they will buy based on the fact that other people will buy when it rises, even a few percent. And then it becomes a self-fulfilling prophecy. And then you get people who think that other people are going to buy it, so they buy it, even though everyone knows that it's not, it's a bad company and the news isn't real. And then you get the people who are anticipating buying, so they'll buy even before those people. And it just becomes a big game of everyone knows that they're buying rubbish, but everyone knows that the stock's going to run because it's in a hot sector with volume. So it's really crazy, but it's just the game.
It's funny. I saw this yesterday on Twitter. Somebody was saying, when people are panicking, they'll go to Costco and buy up all the toilet paper. And even if you're not panicking, you still will go to Costco and buy the toilet paper because those other people are going to buy it and you don't want to be left without it. So it sounds to me that part of what you're saying is
same, yeah.
You may not be motivated because you think this is a great stock, but other people might be thinking it is. So you're going to be motivated by that.
Yeah, no, there's a really good book, which is like 200 years old. And I can't remember the title right now, but it's something around, and people who are watching comment below on YouTube, but it's something about the madness of crowds. And basically when groups of people get together, you will not believe the amount of hysteria they can create amongst themselves. Yeah. Which totally leads us to hot sectors. Like the people are so irrational, it can be unbelievable.
Well, I remember the tulip. I mean, the first.
Yeah, no, that was in that book.
Tulip craze that happened. Well, that's probably more than 200 years ago. I just remember hearing about that and how the price totally ballooned around the value of that. So here's a question. So right now, when you guys talk, you and Timbo, and talk about hot sectors, the hot sector is always changing, presumably?
Yeah, because if the sector wasn't hot, if the sector has to change, otherwise the sector can't be hot. By definition, if it's a hot sector,
yeah,
it means it has to be cold sometimes. Otherwise, how can it be hot? You know what I mean?
Totally makes sense.
Yeah.
The news and the world events are what inform. Like marijuana became legalized, and that created a domino effect of that becoming a hot sector. Now, coronavirus happened, so now let's say healthcare and pharmaceuticals, that's becoming a hot sector. So you don't have anything to do with the hot sector, we as traders.
No, you just you try and find all of the companies relating to the hot sector, and when the company that has the most chance of doing well runs, then you look to buy all of what we call sympathy plays. All of the other companies that are like that company, we buy because if the leader of the pack runs, all of the ones behind will also follow. But when the leader fails, they will also follow too.
Would you say that it's important for a trader, especially a beginner trader like myself? Do I want to at all get involved in the concept of predicting what the next hot sector might be?
No, not at all. Not at all. It's a good question, and it's a common question. And the reality is you can't predict the news. You can't predict the future. You can't predict the news. You can't predict the reaction to the future. You can't predict the reaction to the news. All you can do is say, for example, and this has happened before, and this is an example of a hot sector. There's a shooting in Vegas. It's sorry to bring up a bad example, but it's true. There's a shooting in Vegas, and maybe a couple of cops were injured. So all of a sudden, spy kind of technology, spy equipment, equipment around bodyguards or defense technology, this sector will boom. It will boom because everyone's like, oh, this is a tragedy. How do we prevent it happening? And they will look at like technology and defense, even equipment, costumes to prevent it. All the stocks run. So when you can't predict a shooting's going to happen in Vegas, you just can't predict it. So then, because I remember there was a spy, it was like a sniper was shooting from his balcony a few years ago. But then, so what you do is when one stock breaks out, you then look for all of the stocks that are also gapping up that are in the same sector. And then you will look on a technical analysis level, what can I buy that's a good risk reward that looks like it's going to break out, and it should break out because the leader of the sector broke out. If that makes sense.
It makes sense. Is there a timeline to a hot sector?
Nah, it's completely like news dependent. So the weeds. So if Canada's legalizing weed and America's legalizing weed, and every 2 weeks, it depends how meaningful the news is and how often it comes out. So if like literally a drug that's been banned for 100 years is legalized, the sector is going to run for months and months and months. If coronavirus, the hot sector will last until we find a cure. Do you know what I mean?
Yes.
The more people that die, the more the sector will rise. In terms of biotech, the more people that die, the more the market will crash. The more the biotech companies will rise. It just depends how many people, how serious it gets.
Is there anything else that you think is important for, how much of this plays into part when you sit down? You're sitting down ready to trade. Are you coming into your trading day thinking what's the hot sector? Or are you kind of past that you're...
Nah, you'll know there's a hot sector. Yeah. You know that there's a hot sector because you'll open, like say on a typical day, you've got like 4 stocks up 20 or 30, 40% on the day, 5 stocks up 20, 34% on the day that have gapped up.
Yeah.
And then if there's a hot sector, like saying these days, there's like when Corona was hot and it's still hot, there's 20 stocks up more than 50%. And you're like, what the hell is going on? So when you go through the list, you got biotech, 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 biotech. And then when you look at the news of each of the biotechs, in the headline it says coronavirus, 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 coronavirus. So all you do is you create a watch list, okay, and you type in the tickers of all the stocks that they've got, and that's the coronavirus stock list. And then you look at the technical patterns of when's the right time to buy them.
One of the things I noticed was that every sector has, letters after them. So energy is XLE, basic materials is XLB, industries is XLI. Are these ones that I want to memorize for these sectors?
Nah, that's a good question as well. It's so refreshing speaking to you because it reminds us of all the questions I had when I was starting out as well. They're good questions and the questions that I thought of as well.
Are you reminiscing when you?
It's like shit. I remember when I was talking to Tim Bohen and I just was desperate asking these questions. and Tim Bohen's like, but
well, you're not doing that. You're not doing that. You're being nice to me when I ask you.
No, but Tim Bohen was nice to me as well. No, Tim Bohen was nice to me because he saw an eager face that wanted to learn, and you have the same. So, okay. So no, it's nice for me to answer the questions. I feel good about it. I just don't like answering questions for idiots who don't study enough, or people who just want hot picks. And I don't mean that in a derogatory way. I mean like people are lazy and just want the right answer, and they think that they can learn from your time, and it's irritating. But
maybe they're not lazy, Stephen. Maybe they're just scared to trust themselves.
Nah, I don't agree. I think a lot of the answers you could find on Google. And if someone said to me, I've done this research and this research, and I found this source and this source, and I'm a bit in between each of the analyses that I've read. Yeah. What do you think? I'd be the first one to reply. But if someone says like, what stock are you trading today, or I'm going to go in at this price point, what do you think? I'd be like, if you said I'm going to go on this price point for this reason and this reason and this reason, but I'm worried about this. So you've done your research, you want confirmation bias, but don't just try and make money off this.
I mean, it doesn't make sense that anybody would want to ask somebody else what they're trading. If you've done any listening to these podcasts, you would hear like, why would you want to do what somebody else is doing unless you have that methodology or that pattern or that's what's working for you? Like, I can't imagine that just getting a hot tip from somebody would be enough. But anyway.
Yeah, I don't think 2 people are that bad, but I think a lot of the world is incredibly lazy, and I think a lot of the world is I'm being negative. I shouldn't be like that. I think some of the world is lazy. I think, but more of the world. I don't think people are lazy. I think people expect results easier than they come.
Yes.
I think people think that they are entitled, especially I don't want to get in trouble for this, but like Generation Z or whatever. I think a lot of people grow up with self-entitlement and not understanding the value of hard work. And this might be age speaking for me. because I am getting older.
You are getting older.
But
Well, I think that unfortunately the cultures for some younger people, everybody won an award when they finished the race, not, let's say, first place. So that kind of mixes you up to think that, oh, I get an award or a trophy just because I played. And, then they go into the real world and find out that's not the way it really works. And so they, it's kind of no fault to their own. That's how they were raised.
I don't blame anyone, because I'm kind of in the philosophy of, what is it? I'm not sure where we're sitting at now, but there's a determinism, and you will never make a choice in life because the life's all mapped out for you. It's a debate for another day. But I don't believe fully in determinism, and free will as well, that comes into it. I don't believe fully in no free will and determinism, but I believe in it enough to not be too angry at these people, because you've made the same argument there. You've made the same argument just there. It's their environment. This is the information they've been fed.
I'm not letting them off the hook. I'm just saying, I understand why they come from that place. And my hope is that maybe even in this conversation, they can recognize their disposition to, if you're asking people for a hot pick, that's indicative of you thinking that it could be that easy. So I think it's self-awareness. Just become more self-aware. We're talking about it not being the best way to go, and yet people still do it. So maybe that's ignorance. Maybe it's inexperience. Maybe it's them being confused.
Yeah, no, I mean, I just experienced it in the workplace and advertising as well. You'll get some young people who will it's just even in advertising, it's you've got these young guys and they'll be literally disrespectful. They'll shout at you, not offensively, but they'll be like, I'm so annoyed at this, I'm so annoyed at this, and this is terrible, and so they'll be disrespectful, and then they'll have no work ethic, and then they'll come in late, and then they'll expect a really high paid job, and why am I not getting promoted faster?
Well, Simon Sinek has a great talk. It's
I know this talk.
Right. That talk about millennials. It's such a great talk. And he talks about kind of no fault of their own. This is what their parents were taught how to raise them. But anyway, we can't go down this pike because we only have a few minutes.
But I have empathy for all these guys, and I really try and understand them. So
you're in a position to influence them because you are advocating they play differently. You are proving to them by the way you're operating that asking for a hot tip is not the way to go. It's not sustainable, and you're going to have to do the hard work. So I think your example to them is having an impact. All right, so back to my question. Do you pay attention do you memorize this XLE, XL?
No, it's a great question, and the answer is no. Okay. What will happen? The ticker doesn't matter. You play the chart and the fundamentals. You will, and I told you, the nine indicators, bullish and bearish, and then over the series we've grouped them together. So what you will, once you get good at it, it takes 5 to 10 minutes to do it. So you don't need to know tickers. All you need to do is analyze, do the 9-step process, however it works for you. It takes 10 minutes. Do a fresh analysis of every ticker every time. Come to a decision, and then make your decision, because obviously the data changes, the market changes, the variables change with that. So every situation's fresh. That being said, you cannot help but learn these tickers over time.
That makes sense.
I can name 50. If someone put a gun to me head and said name 50 tickers and tell us the company name and the ticker, I would be able to name 50 probably.
Okay, that's
with a gun to me head.
So it's not about the tickers. It's more about keeping your eyes peeled for the news, for the things that are happening in the media, for what's kind of the focus that everybody's talking about at the coffee table, or the water cooler. Those are the things that are. Do you feel like you were ever surprised? I mean, maybe coronavirus, but were you ever surprised by a hot sector? Were you ever taken by?
Never.
You saw it coming.
Ever.
You
don't ever see it coming. You don't see anything coming ever in the stock market. What you do as a trader is you react to things. So nothing is a surprise. Everything is a reaction. Something happens, you're like, okay, this has happened before, or this is close to this resistance level. I'm going to react to it like this. Nothing should ever be a surprise. Everything should be, this happened, I'm going to react like this, or that happened, I'm going to react like this.
Okay.
Like if it's stuff, and after 3 years or 4 years, you see everything in the market.
So let me just ask you this. So what I think I'm hearing is that you're saying there will be unexpected developments, and you want to not be triggered by the unexpected development, but get very clear-headed around how you're going to navigate this unexpected news.
It's like, but not like it's like with the market, you've just got to. It's hard to explain, but you just don't. It's not like you expect anything. Like nothing after even a year of trading, you can every day you expect the unexpected. Like you don't know anything that can happen in the market, and nothing's in your hands. So all you can do is like a stock can be 1,000% up one day, it can be 50% up the next day, or like some stocks are up 1,000%, some stocks are up 20%, some stocks are up 100%. A stock can go from 2% to 500% in a day. Like it happens all the time. So nothing unexpected happens because everything that happens you can't predict, and it's unexpected.
Okay, so but you've been trading how long now?
Like 1.5 to like 3 years ish.
So at the beginning, I imagine though everything is a surprise, right? When you think back to 3 years ago.
Yeah, but not really though, because like so 3 years ago I start trading and I see a stock up 150% in the first week. So I'm like, that's the normal thing. And then I don't see one up for 150% for a few weeks, but then it happens again. I'm like, that happened again. And then maybe one day it goes up 400%. I'm like, that's more than normal. But you can't, it's not like it's unexpected. What you've got to do is think, why did that go up higher? Because the volume significantly more and the float significantly less. So it's not unexpected. The stock market, all of the variables work in mechanics with one another to make the percent gain. So nothing's unexpected. It's all part of 9 moving parts of a formula working together. Okay. And that's why you can trade successfully. When you learn how the 9 moving parts work together, nothing should be a surprise ever.
Got it.
Because based on the 9 moving parts, you can expect what's going to happen.
Okay.
Yeah.
Okay.
And in the first week of trading, everything's unexpected because you don't know what the hell's going on.
Totally. First week. I imagine it would be the first year or first decade.
No, but nothing is. You shouldn't be like. I mean, today I took up that loss that I was talking about with you earlier, and that wasn't even unexpected. I was like, shit. I missed this trick and I missed that sign and I missed that. And I was like, I fell for some old tricks.
Yeah.
Not to worry. I haven't fell for silly mistakes in about a year. So it's disappointing, but it's a great reminder, and I'll move on. So, but that wasn't an unexpected trade. Yeah. I missed a couple of telltale things.
Gotcha. All right. So we have one episode left in this variable series. And for that episode, we're going to bring Tim Bohen on to talk about the SEC filings. And then I think we're through our variables. So we have another podcast we have to do now. So I guess we should close up. Anything?
Yeah, peace. And
about
no. I think all of these episodes are really valuable. I think everyone else will find them valuable. And I think you asked some really good questions.
Okay, good. I hope so.
And you're super happy about learning. So it's.
I'm excited about learning, and the more I learn, the more I want to learn. So that feels really good. I was intimidated very much in the beginning, but the deeper I get in, the less afraid. And it doesn't mean like I'm cavalier. I'm just excited because I'm curious, and I feel like, this, it just all makes sense. Like the concept.
Yeah, it's not hard. It's not hard to make it. It's so simple. Like imagine you know what you know now. Imagine hearing the same thing over and over for another 3 years.
Yeah.
Like you can see it. It's not like deep, crazy philosophy. It's pretty simple.
The puzzle pieces are coming together.
Yeah,
when you put a puzzle together, you start with the frame of the puzzle. So the rest of the puzzle isn't there yet, but I'm starting to feel like I'm seeing the outline of the frame. So that feels good.
It's a very, very good metaphor. It's a very good metaphor. You're good at talking. So am I.
That concludes this episode of the Steady Trade podcast. And as usual, if you have any questions, concerns, or recommendations for us, please check us out at SteadyTrade.com, where we actually post transcripts of the episode and recap blog posts of the episode. It's a great resource if you're looking to expand your trading and get a more immersive experience from the Steady Trade podcast.